Welcome back to Market on Close. I'm Marley Caden. We've got lots of earnings to talk about. Apple just released. I want to bring Melissa Otto into the conversation here to take a further look at Apple's earnings that we just got. Melissa, the head of TMT research at SP Global Visible Alpha. Melissa, thank you. We're just getting these numbers in and digesting them now, but what are your key takeaways from Apple?
It's great to be here. Thanks for having me on. Absolutely exciting to see the earnings from Amazon and Apple this afternoon. Certainly, Apple put up decent numbers. I think the big surprise really being around the iPhone revenues, those coming in around 10% better than Visible Alpha consensus expectations.
And that iPhone revenue coming in ahead, Mac revenue also coming in ahead, as I'm looking to about 15%, up 15% year over year, coming in almost $1 billion over the estimates. iPads were down, wearables down, but certainly the difference brought by the iPhone makes up for the losses in the other categories here. And we are seeing the street respond positively, up about 2% right now. With the lack of guidance from Apple, what do you think some of the most important things on the call are going to be?
Services is a really important dimension to the story. The services came in a smidge better than Visible Alpha consensus, but I think as we look out over the next couple of quarters, the market may want more conviction that the services business is really going to offset any potential continued softness that could come from the product categories.
Yeah, and certainly, the services revenue coming in at $27.42 billion, which was up 13% year over year, but not as high a beat there. So service is definitely a focus. How about China? China coming in with revenue of 15.37, up 4% year over year, but lots of discussion about China and this rollout, of their AI product along with Alibaba, and also, of course, tariff concerns.
Absolutely. Tariffs continue to be an overhang for many different reasons. So that's an open question. It'll be interesting to hear the management's commentary around that and how we should be thinking about it going forward. China came in line with expectations. There was no big surprise there. It'll be interesting to hear the commentary around the China market from an end user perspective, as well as from more of a broad supply chain perspective.
And I also want to ask about your thoughts on the cash and cash equivalents number coming in 42% higher year over year. It's $36.27 billion. Blew away estimates for $27.5 billion. What are your thoughts there? Will we get any insight onto how they plan to deploy that?
Indeed, it's a remarkable number. $133 billion. One wonders, could we see a ramp up in dividends, share buybacks? What are they going to do for shareholders? But, there are bigger questions around potentially, is there an M&A discussion potentially on the horizon? And I think even more interestingly is, could the company start to meaningfully start to ramp its CapEx like we've seen from the hyperscalers? Could there be some dimension to their business model that they start to really meaningfully invest in and think about how to enhance the actual platform and drive potential future growth and competitiveness?
And as you look at the report and all the numbers, are there any spots other than looking at services that, raise any potential flags for you?
I mean, the Mac was a little bit soft. The iPad wasn't exciting. It'll be interesting to hear what they're thinking potentially for the second half of the year. Those tend to do a bit better around back to school and the holiday selling season. So there is some seasonality in those numbers, but they're not exciting for this quarter.
How important is it going to be on the call that they address their strategy around the supply chain, knowing that we have all of these tariff trade deals in place, or at least frameworks for them, and some of them with countries that they do a great deal of business with, north of 20%?
It's an important issue that they're going to need to talk about. I don't know if they even can fully address it until deals are all completely ironed out, but I think they have to probably come and give the market at least some sort of thought process and insight into how they're thinking about it and what the potential navigation of it may be. How we should be thinking about it in terms of our modeling and where the market may see consensus go around some of these issues.
And we have seen, coming into earnings that Apple was the second worst performer in the Mag 7. Last quarter we saw shares fall despite them reporting a better than expected quarter. But now we're seeing the converse of that. We're seeing them up 2%, at least after hours. Do you think that that's because they're coming from a lower starting point? They didn't have as much priced in like the others do?
Apple is probably more exposed in some ways to the tariff situation because not only do they sell into markets like China and other areas of the Far East that have more significant tariff tariff exposure, but they also have a supply chain angle to their business model that is pretty significantly geared into the Far East. So net net, I think you have these two forces that are both exposed and are forcing the company to reevaluate and probably reimagine parts of their business model that they really haven't had to think about for a while.
Well, we're certainly going to have a lot of questions about that. I think there'll be a lot of questions tied to that cash spend and where it's being put in place. But Melissa Otto, we appreciate you being with us to break down those Apple earnings right after they came out. Melissa Otto, the head of TMT research for SP Global Visible Alpha.